What's good YouTube? Welcome back to my video. So today I'm going to be talking to you guys about Apple and why has Apple hit a new all-time high. I am going to be going over some fundamental stuff in regards to Apple, and then at the end be doing some technical analysis, so reading the chart in regards to Apple. So to start off with, they had some news. So Apple has hit $2.5 trillion or $2.49 trillion today. And these are the reason as to why it has happened. So the first reason is that Apple has announced that they will be manufacturing 90 million new iPhones this year. So for September, the September launch, which is a 20% increase from the 2020 levels. So they are increasing 20% of manufactured iPhones, and they're essentially releasing them in September, or that's their planned or expected time of release. They will be upgrading processors, displays, cameras, etc., like Apple typically does every single year. Now, the second main reason is that they have a new analyst, or an analyst that's going to be adding them to their focus list, which is an analyst from JP Morgan. So right here, as you could tell, the JP Morgan analyst, he gave them a rating of $175. So his price target for Apple is $175, and it's currently traded at $158. They also had an analyst give them a rating of 170 the same day that the JP Morgan analyst gave it, and he gave the rating at $170. So as you can see right here, this shows you the high ratings, the average rating, and then the low rating. I think there's like only one guy that gave a 90, and then another guy gave like 120, and the rest are like all somewhere in these areas. So the average is $158.46. So there's still like an 8 to 9% upside for Apple. So in regards to that, that's one of the reasons why the stock went up. Right, and the next thing that Apple also announced, if you guys don't know, they are announcing that they're doing an Apple Pay Later service. So it's going to be an added feature on Apple Pay. Essentially, Goldman Sachs would be taking care of the loans. So how it works is, instead of going ahead and buying something on your Apple Pay and essentially paying interest on your credit card if you don't pay it off in full, Goldman Sachs would be partnering up with Apple. They will give you, they would basically pay it for you, and you can pay them back in installments, interest free. So there is two different methods on how it would work. So it says here, the service is currently planned to work as follows. When a user makes a purchase via Apple Pay on their Apple device, they will have the option to pay for it either across 4 interest-free payments every 2 weeks, so going with what most people get paid, or across several months with interest. One of the people said. So the plan is with 4 payments is called Apple Pay in 4, while the longer-term payments plans are called Apple Pay monthly installments. So essentially, if you could pay it off in 4 payments every 2 weeks, then you don't pay any interest. And if you do require a few months to pay it and pay it off in a few months, then what they do is they will charge you interest. So they will obviously charge you a lower interest than what you would probably get charged through the banks or through your credit cards, in order to basically attract you to do it with them. And obviously Goldman Sachs would make the larger percentage, and then they would give a cut to Apple because they connected a customer with them. And that's another way of how Apple's going to be making money. So they're pretty much extending from just doing iPhones and technology and stuff. Obviously, we all know that they have credit cards, so they're getting into a lot of financing products, looking like they want to become like an Alibaba in China. So if you guys don't know, Alibaba pretty much are expanded to like every single company in China. So it looks like Apple is looking to take over. So in regards to the technical analysis, what I wanted to bring up is, if you look at Apple, it hit some new highs. If you look at the daily chart, it is well overbought. So Apple is overbought, and typically when Apple gets overbought, there's usually a dump, or at least a drop. So you see right here, Apple got overbought and the stock started dropping. The other time where Apple got overbought was right here. So as you can see, Apple got overbought right here, and look at the drop. But it doesn't always mean that it will drop. but it's just an indication. And then there is also bearish diversions. It hasn't formed yet. There is still room to go down before it turns red on the MACD. So this just indicates to me right here that this stock could possibly still go up a little bit more before it actually starts coming down and actually hits higher price targets. So I think what may happen is either one of two things. Stock may rally just a little bit higher and then start coming back down before making new highs, or it could possibly go down. Now, if it goes down, how I would want to play this is I'd want to enter somewhere between 145 to 138. So I'm trying to buy in this area and then play the upside. If it does take a big correction like it has the last two times, then the area to buy would be somewhere in the 120s, so the 126 to like 130, somewhere by in this area, and it has a 200-day moving average as support and previous support and resistance. So this is how you would play it, and this is a very strong area, and it would take a lot for us to actually go under that 126 area. So that's how I would play Apple, but obviously the company is really good fundamentally. Trade at your own risk. Please don't forget to like and subscribe.